this is a classic moving average trading strategy. Keep in mind that the moving average is a lagging indicator, but you can still use this very much for your decision support. All right. So this is the 10, 20, and 50 period simple moving averages. Again, most, if not all, the money managers watch these simple moving averages to make decisions. So you are not alone, right? So the shorter term moving average, which is the 10 period moving average, will move the most and react to price changes very quickly, followed by the 20 period moving average. And then the 50 period moving average will be the slowest to move here to price changes. Now, when something is trending upwards strongly, all these averages will be pointing upwards in the same direction. Now, this is a great sign to go long and to buy the stock. And if all the three averages are pointing downwards, then you can go short. So we typically use this convergence between the moving averages to base our trading decisions. So the trading rules is simple. When the 10 period moving average converges on the 20 period moving average, then we go on an alert. And when the 20 period moving average converges on the 50 period moving averages, we close the trade. Again, this works both up and down. As an example, let's see this chart on a 5-minute time frame intraday that I pulled as an example. All right. So here you can see this stock chart on a 5-minute time frame and the charter communications. So the three different lines. So I think this is blue shows the 10 period moving average, green shows the 20 period moving average, and yellow shows the 50 period moving average. As you can clearly see, price has been trending down. All right. Now, the 10, the 20, and the 50 are all pointing downwards. It's a good sign to go short. Let's say I go short on the stock here. I short sell the stock at this, say $619. Although the line here is 617.9, let's say I short this at 619. Because all the three moving averages are pointing downwards, it's a great sign to go short. All right. Now what we'll be watching here is the 10 period moving average very closely. It's continuously going down, going down. Well, as long as all the three are going down, you can clearly be in the short side of the trade. Now what's important, what's important here is at which point is the 10 period moving average converging on the 20 period moving average. I can see that here. So here I can see an alert. Well, the reason why I'm saying it as an alert is the 10 period moving average not only converges on the 20, but it points back up to the 20. That's a sign that says we should be on the alert mode. Because in the short term, this is telling us that the prices are going to look more positive. Now, as the 20 period moving average starts to curl up to the 50 period moving average, so here, that's where I circle. So that's where you close the trade. You buy the stock to cover your short position and exit out of the trade. So at that point, it would mean that the change in the trend is seen overall. So as soon as the 20 period moving average is curling up towards the 50 period moving average, it means that there is a big change in the trend overall, and the stock could be trending upwards from now on. So you close the trade here and then you get out. So again, this is a very simple strategy. I would say do this for a 5-minute candle or even a 15-minute candle on an intraday chart of a stock that you follow and see how this plays out. And in the next video, I will also show you an example of an intraday chart to see how we could have traded while watching the price action. Thank you. We typically use convergence between the moving averages to base our trading decisions, like I explained in the previous video. Here I have pulled the intraday trading chart of Boeing on a 5-minute time frame, and I've added all the moving averages. the 10, the 20, and the 50. So the 10 is the blue line, the 20 period moving average is the green, and then the yellow is the 50 period moving average. So I pulled this all on my TradingView platform just to understand how you can base your trading decisions by looking at these three moving averages. So on the 9th of February, as I can see here, there was this resistance line. The stock was going up again. If you looked, previously, if you looked at the past few days, it has been going up. So here, this seems more like a resistance line that I drew in red. And at this juncture, you can see that the 10 period moving average, the 20 and the 50, all are pointing upwards. So this is a great juncture because it's a good sign to go long. So let's say I go long here, right? I'm going to be watching the 10 period moving average when I'm in this trade. So I can stay long, I can stay long, I can stay long because the 10, the 20, and the 50 all are pointing upwards. The 10 is continuously upwards. I can stay in the trade, keep watching the 10 period moving average. Now, the moment at which the 10 period moving average converges on the 20 period moving average, and if it starts to point back down to the 20, so you go on an alert mode here. I'm not going to sell my position just yet, but I'm just going to be on an alert mode because this is telling me that in the short term, the prices are looking more negative. Now the 10 is going down, the 10 is going down, and I see the 20 is also curling down towards the 50, right? Now as soon as this 20 starts to curl down to the 50, that is when I close the trade and I get out. I take my profits here. So I get in a long position here, and at this juncture, when the 20 is also curling down towards the 50 period moving average, I close my trade. Now that you can see that the 10 and the 20 are trending down, you can also see that the 50 is starting to turn down. So you can go short here. I can short the stock, right? So I'm going to go short here, and you can watch the 10 period moving average now. It's continuously down. I can stay in the short position. The 10, 20, 50, everything is down. I can stay short. Now, what you need to watch for here is when the 10 period moving average converges on the 20. I think here it does. Here it does. It converges. But the point you need to be aware of is when this 10 period moving average converges on the 20, and if it points back up to the 20, you can go on alert because it tells us in the short term that the prices are looking more positive now. But it continues to go down. It go down, I can stay short, I can stay short, right? As you keep progressing, you can see that the 10 period moving average is starting to converge here on the 20 period moving average, and it's starting to point up. This is when you should go alert again, right? Now, only when the 20 period moving average starts to curl down, starts to curl up to the 50, you can close the trade. You can buy the stock to cover your short position and then close the trade. But in this case, I don't have a signal yet. I just saw the convergence of the 10 on the 20 here, but the 20 is yet to curl up to the 50. So we would still stay short on this trade. Hopefully tomorrow we can see what the price action is. If it goes back up, I can close the trade. So keep in mind that this moving average is a lagging indicator, but you can still use this for decision support. As you can see, you could have done a long trade and walked out with a profit just by looking at the 10, 20, and the 50 period moving averages. Likewise, I could have gone short and I'm still in the trade. And as soon as this 20 turns back up on the 50, I would close my trade. Also, one more thing that I want to show here is when you're in the uptrend, you can see that the moving averages are acting as a support, as the support line. See this? In this case, the 10 period moving average, it's acting as a support, and then it bounced off, it bounced off, it bounced off. And in some cases, the 20 was used as a support, bounced off. And then here the 50. Likewise, if you're going through the downward trend where you're on a short position, you can see that the 10 period moving average is acting as a resistance, right? And if this breaches it, uh, test the 20 period moving average. So the 20 period moving average acts as resistance. And rare cases, extreme price swings will make the 50 period moving average acts as resistance. But again, clearly you can use this 10, 20, 50 strategy to get in and get out of trades. As you can see, this is a helpful way to make your decision to enter and exit the trade.